just had the latest inflation data just come in and it's bullish. Yes, the markets were waiting in anticipation for this data, and we can see Bitcoin bouncing here, sitting at 96.4, and the market should take this data positive. We're going to break down exactly what's happening with the PPI data, where we could go from here, and some of the other risks in the market. If you appreciate this emergency update as and when the data comes out, smash all the likes. Do not forget to subscribe. Let's get straight into this one, guys, because it's a really important update to do with the PPI inflation. Remember, some of the economic data we received earlier a couple of weeks ago really threw this market for a spin. It started in December with Jerome Powell's Fed meeting, which said, hey, we're only going to get 2 rate cuts next year. The economy is too healthy. Then last week, we started getting the JOLTS figures. We saw the non-farm payrolls on Friday showing that the economy was too hot. The economy was too healthy. And so we started to need data which shows the opposite. We don't want to see sticky inflation. We don't want to see too much good growth. We want it where it's a bit degrading, such that we have a reason for the Fed to do some rate cuts, right? That's the focus of this market right here. So what we saw was that 3.3 was the inflation reading which came in versus the consensus of 3.4. That was fantastic. So we saw that on the headline figure. If we take a look at the core PPI, which takes out food and energy, etc., that came in at 3.5 versus 3.8. So this is good news. Yes, these bars are still pretty high. I mean, this was set the same as last month, so 3.5 versus 3.5 the month before. That's fine. But the estimation was that it's going to go up. Right? The estimation was that it's going to go up. And so that's where we need to be careful. Now, one thing which this market is trying to figure out is this economic data just the post-Trump election hype? Was it that Trump got elected in November? There was a spree of hiring and excitement. Retail sales were positive. And then things are going to cool off now in what many people are calling like the evaluation period. Is this going to be a period now when people say, okay, the inauguration's coming up, let's see what is actually done. So that's what we're trying to see. Is this data super hot, or is it starting to cool down? This is our first clue that it's not as hot as some people were worried about. Remember, those fears yesterday when we were dumping were, we had Bank of America coming out yesterday, which we covered in yesterday's video, saying maybe we're going to get a rate hike, right? The data is that strong. So hopefully that can quell some of those fears. But we're not out of the woods yet. Tomorrow we get CPI inflation. Very, very important that we monitor CPI inflation as well. So we'll be watching that tomorrow here on this channel. Make sure you are subscribed. Make sure you've hit the like button on this video if you like this type of content. And we need to take a look at the Bitcoin price. So yesterday was a crazy day, right? If you take a look at yesterday's candlestick, we went as low as 89,000 yesterday. We dipped below 90K. But at the same time, we managed to close back at 94.5. So we started at 95 range, we went back all the way down to 89, we came all the way as high as 95.9 on that candlestick, and only to close at 94.5 again. So it ended up being what is known as a really big doji candle. If you've taken my TA course, ijazcrypto.com/TA, you will know that this is a sign of a reversal. So the fact that we're seeing now another daily candlestick the next day opening up in the green is a really good sign for us stopping this bleeding. That being said, we've got work to do, right? We got a high here, which we need to get higher than. We've got a high here that we need to get higher than. We've got to break the structure, because the last thing you want to do here is do something like this, cool off a little bit, and then back off we go back down. That has given the bears the chance to reset. That has given the bears the chance to, quote unquote, reload the ammunition, right? Ready to go for the next leg to the downside. And that's not what we want, because this time if we curl back over, guess what? We're losing 90K support, and then this is our last pivot point, right? If we start losing 85.5, things could be pulling back all the way down to that 73, 74K region on the previous all-time high. So I want you guys to watch this very, very carefully. I want to meaningfully see us break structure, right? When I say structure, I mean this. Let's get out of this region. It's going to take some effort. It's going to need some more data coming our way. It's going to need CPI tomorrow coming our way. But this is a good step. The good step is that we're seeing a big, strong move by Bitcoin. A lot of people ask me, why are altcoins not moving? Bitcoin's got to do its thing first, right? I keep saying this all the time. You're not just going to get Bitcoin bouncing and then suddenly altcoins rocketing off to the sky. No, people are worried right now. They're worried about all the things I just said to you right now. Risk was rotating off on, TradFi and NASDAQ and the S&P and Bitcoin as well. Now we need to see that narrative is being full. Economic data needs to come in not too hot. It needs to show that the economy is not too hot and that there is a chance for the 2 rate hikes we wanted, plus maybe even a cheeky 3rd rate cut this year as well, right? That's what we want. We don't want the narrative that, oh, this rate cutting cycle has come to an end and that the fun is now over. No, there's more work to do. CPI tomorrow, and we'll cover it off with you guys. Make sure you're in my Telegram community if you want the quickest update. ijazcrypto.com/TG. It's the very first link in the description. If you actively want to trade, check out the links in the description to Bybit, to Mexi. Those are the platforms I use. And I'm going to leave you with this. A bunch of people got wrecked in the last 24 hours, guys. I'm going to send you another reminder like I've always done. When I last checked this, it was close to $600 million wrecked in the last 24 hours in both directions. I mean, look at this stat here. So this is showing close to 500 million, but it's showing half of it long, half of it short. It doesn't matter which direction you're in. Daily candles like this one wreck you in both directions because market makers just want to make money. And on a bigger scale, that's what they're going to want to do. So if you're high on leverage, bring that in. It'll make things more comfortable for you. It'll give you the holding power for you to hodl. Most of you panic sell because you're in way too deep. Chill it out a little bit, put it to a position where you're comfortable, where you can manage this volatility. Like I said from the outset, Q1 2025 is going to be volatile, but there's money to be made should you be in the market. Hopefully you found this video useful. If you like this type of content, smash the likes. Do not forget to subscribe, and I'll see you in the next one.